Welcome to Banking 101, a first principle jargon-free course on banking. In this short lesson, we will learn about lines of business in banking and their relationship with products. The line of business refers to the business unit through which the bank serves its customers. The product is the financial product sold to the customer, like a mortgage or a bank account. In this lesson, we will learn how the two relate to each other. Lines of business look different for every bank. Hence, we will describe a commonly occurring structure using the illustration of a hypothetical bank called Trust Bank. Trust Bank has 4 lines of business. The first is called the Community Bank. The second is the Commercial Bank. The third is the Corporate and Investment Bank. The fourth line of business is called Asset and Wealth Management. Each line of business has a CEO who reports into the CEO of Trust Bank. When a customer signs on to the product offered by the bank, she is assigned to one of these lines of business. Over time, the customer buys products from different lines of business. For higher net worth and business customers, the bank tries to assign one line of business to handle the primary relationship, so that the customer can have one point of contact at the bank. The customers of the community bank are of 2 types. In the first group are individuals who buy everyday financial products from bank accounts to mortgages. In the second group are small businesses that the bank defines as businesses earning up to $3 million in annual revenue. The community bank at Trust has business units within it, each of which unit is headed by a business leader who reports into the CEO of the community bank. The consumer banking unit sells cash management products to individuals. The home lending unit makes mortgage loans to individuals. The third unit is auto and cards that makes car loans and issues credit cards to individuals. The wealth management unit within the community bank provides investment advice to individuals who have up to $1 million to invest. For those with small amounts to invest, customers can access a robo-advisor via a digital platform. The unit also offers brokerage service to all clients. Customers with greater than $1 million in investable assets are served by a different line of business that we will shortly cover. Finally, the small business banking business unit serves micro businesses. This is the only unit with the community bank that serves businesses rather than individuals. Consider Arthur, who is a doctor. He has a bank account with the consumer banking unit of the Trust Community Bank. He also takes a car loan from them where he interacts with an auto loan officer. Arthur also takes a mortgage to purchase his home. He interacts with a home loan officer within the home lending business unit. Arthur also needs a commercial real estate loan to finance the purchase of his clinic. Since the home lending business unit only does consumer mortgages, for commercial real estate loans, he is directed to the small business banking business unit. Ideally, Arthur would not like to give the same information to the bank every time he is buying a new product. Similarly, he would also like to see all his balances with one login to the customer portal. The extent to which a customer gets this unified level of service varies by banks. We will now move to the commercial bank at Trust Bank. The customers of the commercial bank are of 3 types. In the first category are businesses with greater than $3 million but less than $20 million in annual revenue. As we previously learnt, businesses with lower than $3 million in annual revenue are served by the community bank. In the second category are middle market companies that Trust Bank defines as entities with annual revenues greater than $20 million but less than $500 million in annual revenue. In the banking industry, these revenue cutoffs vary by bank and country. The third category consists of local governments and not-for-profits. Within the commercial bank there are 2 business units, each headed by a unit head who reports into the CEO of the commercial bank. The first unit is called Business Banking, which is focused on businesses that fit within the $3 million to $20 million annual revenue bucket. The products sold include cash management products and credit. The second unit, called Middle Market Banking, serves middle market businesses, governments and not-for-profits. In addition to selling the same products as the business bank, it also offers more complex cash management products like liquidity management and receivables management that are required by larger companies. While the product menu in business banking and middle market banking appear to be the same on the surface, there is a greater level of customization to the customer's requirements in the middle market unit. The Corporate and Investment Banking unit at Trust is abbreviated as CNIB. The customers of this unit are large entities, often with global reach. This includes large corporations that Trust defines as businesses with annual revenues greater than $500 million. CNIB also has large government entities as customers. While middle market banking unit serves small municipalities, CNIB customers include central, state and large city governments. Not-for-profits of global scale are also its customers. CNIB clients also include other financial institutions. You may be wondering why a financial institution will need the service of another financial institution. Consider a fintech that needs help of an investment bank for an IPO. Or a non-bank lender that does not raise deposits and hence, borrows from a bank. Finally, CNIB clients include investing entities like hedge funds, pension funds, etc. The CNIB line of business at Trust has two business units. Corporate banking sells the same products as the middle market banking unit of the commercial bank. In addition, it also sells investment banking products, as these services are typically needed by large corporates. The second unit is called Markets and Security Services. This unit includes the sales and trading desk and asset servicing products. The clients of the Markets and Securities Services could be the same as for the corporate bank. For example, a corporate entity may need to hedge commodity exposure or buy foreign exchange. But the biggest clients of this unit are investing entities. The prime brokerage unit sits here. The final unit of Trust Bank is Asset and Wealth Management. The Asset Management sub-unit sells two types of investment management products. The first type consists of mutual funds and exchange-traded funds that are open to both retail and institutional investors. The unit does not directly sell to retail investors but distributes these products via retail brokerage firms. The second type consists of private investment funds, which are similar to mutual funds in that they pool funds of investors, but these are sold only to institutional and high net worth investors. Separately managed accounts are also offered. The private bank unit sells investment management products to ultra-high net worth individuals. In addition, it serves as the one-stop shop for all of the bank's products. You may remember that investors up to $1 million in investable funds were served through the wealth management unit within the community bank. The private bank serves investors above that cutoff. We can summarize the lines of business of Trust Bank. There are 4 lines of business, each headed by a divisional CEO who reports into the head of the bank. Within each line of business are business units. Most employees work in the business units, which are shaded in yellow on this page. The employees in the blue shaded boxes are mostly engaged in enterprise functions like HR, finance and IT. It is worth reiterating that what you see on this page varies by each bank. Each block on this page are Lego blocks that are arranged in different ways across banks and have different names. In the previous lessons, we got an in-depth understanding of the banking product suite. You can see the entire product menu of banking on this page. These are the products being sold to customers of Trust Bank. The customers themselves sit in the lines of business. For instance, a wholesale bank account can be sold to a customer within the commercial line of business or a customer within the CNIB unit. M&A advisory is a product that is usually sold to CNIB unit's customers but may also be sold to some of the larger customers within the commercial unit. You can think of product as what is being sold and the line of business as who, within the bank, is selling the product. This brings us to a conclusion of this lesson. At this stage in this course, we have completed an in-depth review of products sold by banks and the lines of business that sell them. So far, our discussion on what a bank does has been qualitative in nature. In the next lesson, we will take a numbers view. But before proceeding, review the summing up section of this lesson. I will see you shortly on the other side.